Hi, Assalamualaikum. Today we will discuss Bollinger Band. Okay, what is Bollinger Band? Bollinger Band was developed by John Bollinger. John Bollinger, one of the famous uh, technical analysts in the world. Bollinger Band operate in a similar way except that the envelope or band are calculated using standard deviation to measure volatility. Okay, Bollinger Band uh, what makes different between Bollinger Band and envelope is in terms of their calculation or their formula. Volatility is based on the standard deviation which change as volatility increase and decrease. So in Bollinger Band, uh, the band been identified by calculating a standard deviation based on the simple moving average. The first requirement in plotting a Bollinger Band is a time span as with a moving average. By default, we will use 20 days moving average. The band automatically widen when volatility increase and contract when volatility decrease. The longer the span, the smoother or but less sensitive are the fluctuation. Bollinger Band is best used to identify the M top and W bottom or to determine the strength of the trend. Okay, so this how Bollinger Band looks like. Okay. So we have three line over here. Upper band, the first one, this one is the upper band, middle band or the moving average line, and this one is a lower band. Okay. So how the upper band and lower band been calculated is is it's calculated using a standard deviation of 20 days moving average. Okay. How we want to use Bollinger Band? The easy way to use BB or Bollinger Band is to use the upper and lower band as a target price. There are many ways to use Bollinger Band. Okay, if price bound off the lower bound and cross above the 20 days MA, the upper band becomes the upper target price. A crossing below a 20 days moving average would identify the lower band as the downside target. So in this case, the upper and lower band will act as our target price. In strong uptrend, price usually fluctuate between the upper band and the 20 moving average. In that case, a crossing below 20 days moving average warns of trend reversal to the downside. Okay, there are certain rules in interpreting the Bollinger Band. First rule, when the band narrow, there is a tendency for sharp price changes to follow. Okay, this of course is another way of saying that when price trade in a narrow range and lose volatility, demand and supply are in a fine state of balance and its resolution will trigger a sharp price move. I will show you what is meant by these rules later. Okay, for example, in this chart, the band narrow, what are the mean by the band narrow or the contraction? Okay, this one. If you can see that the band at the beginning, previously, the band is wider, and it's moved quite smaller until this period. Okay, until this point. So what are meaning by this one? So the wider difference between the lower band and upper band show that the volatility of price or the price change is quite active compared to this area. Okay. Rule number 2. If the price exceeds a band, the trend is expected to continue. This is really another way of saying that if the price moves above the band, upside momentum is strong enough to support higher ultimate price and vice versa. Okay? This is a common experience at the start of bull market and vice versa for a down penetration. The recrossover of Bollinger Band usually indicates short-term exhaustion and it's quickly pulled back again. However, this is just a process of pause for breath until the trend is then able to extend again. Okay. Rules number 3, when the price traces out a reversal formation after it has crossed outside a band, expect a trend reversal. In the next chart, we see a series of 3 rallies that touch or exit the upper band. Then, finally, the final attempt, the uptrend is violated. Then, the price fall below the previous minor low to complete small top at point F. Okay, so the previous explanation referring to this point, we can see that the price are touching the band and exit and then it's go down again. Okay, second time and third time, then the price, okay, they are testing. If you remember the top, this one considered as M top. Okay, they are testing the upper in this Bollinger Band. The upper band can act as a resistance and a lower band can act as a support line. If you remember, when the price testing the resistance or the upper band and it failed to break out the upper band, so then the price will go down again and testing the support line. Okay, so for example at point F here, okay, this is the previous low. When the price, okay, decrease and break through this one, the uptrend, the dotted line here, so it's a confirmation of a trend reversal or a correction in this case. Okay, and we can see that the price crosses below the simple moving average. Okay, so in this situation, it indicate a selling signal. Okay, so what I meant by the expansion and contractions, so whenever the price expand, so it shows the volatility is really high or the stock price is active. Okay, means that the demand also high. Okay, so if you can see, this is the first buying point, or at this point we can see that this is a buying point. Why I said that? Because there are two things. First, it started to, the band itself started to expand. Previously, it's contract, and when the band started to expand, we said that is one of the buying signal. If you remember, I said there are many ways to use Bollinger Band. First, we use the upper band and lower band as our target price. Second, we use the expansion point and the contraction point to help us to make a decision or to signal us, to alert us where is the buying point and the selling point. Okay, so the third one, we can see that whenever the price crosses above the middle line here is a simple moving average line. So this one we consider as a buying signal. If you remember, in simple moving average, whenever the price crosses above the moving average, so it indicate a buying signal. Okay, so then when we want to sell, if you buy over here, when you want to sell, whenever the band start contract. Okay, so at this point it start expand and start contract. Okay, so then we see that the price is crossing below the middle line or the simple moving average line, so it indicates a signal. Okay, this is another example of contraction. When contract, then it start to expand, contract again at this point. Okay, buying. Then when you want to sell, you sell when the price starting crosses below the moving average or the band start contracting again. So in this case, okay, whenever you see the price, okay, closest to the band, either upper band or lower band, we call this situation as walking the band. Okay, let's look in our chart nexus. Okay, in our chart nexus, so we choose the Bollinger Band. Okay, so this is the Bollinger Band. Okay, so you by default Bollinger Band will choose what are the meaning by 2020. 20, the first 20 is the simple moving average. We use 20 days moving average, and 22 the standard deviation is 2 standard deviation. Okay, so how we want to read in this case? Okay, when okay, where is the contraction point? We look into a contraction point. Okay, for example, here we can see this is sorry. Contraction point. Okay, this is a contraction point. And then you can see that, okay, basically, actually the price started crosses the moving average line is somewhere here. Okay, at this point. Okay, but if you worry because of, if you can see that previously the trend is a sideways, so we're not sure either this is a correct signal or not. Okay, so you can use, rather than you use only a moving average, we can use the Bollinger Band to confirm our decision. Okay, if you're not sure, if you are just imagine you use only a single moving average, 20 days moving average, you see that is it a confirmation for us to buy? Okay, is it confirmed that the price or the trend will already reverse or will start its uptrend? Then we put Bollinger Band together, we see that, okay, it's not really a signal over here, then it's contract over here, so you can start buying. Okay, I know that, okay, this one, buying. Okay, I know that some of you may think that, okay, this is a previous chart, or what we see here is all historical. So we learn from this history to make a future decision. For example, a simple example, you are studying this harta and have an intention to buy this stock. Okay, would you buy now? If I were you, I won't buy now, because if you can see that, okay, the price is already high. Okay, there is no correction yet until it start, and since it start increase. Okay, so when you want to buy, if you want to buy, so we wait until the band contract. Okay, and confirmation, if the band contract, then you will it will help you to make decision to buy or not to buy. If you buy at this point, it's quite high risk. Okay, I hope you understand my explanation on Bollinger Band. So we will discuss again during our discussion session. Thank you.